So how do trends work in the stock market? In this video, I'm going to show you some important concepts that often get skipped that'll improve your understanding of how the markets move and make you a better trader. Hey, how's it going? On this channel, you will learn the steps I took to go from trading with a full-time job to trading as a full-time job. So if you're new here, consider subscribing. And today, we're going into stock market trends. Think of market trends a lot like waves crashing on a beach. As the trend or market moves higher, think of that like waves crashing higher and higher because the tide is pulling them into the beach. But eventually the tide has to reverse and it will pull the waves lower and lower on the beach, and that will be much like a downward trend, making the market move lower and lower. But as the waves move up the beach and the tide pulls the waves higher on average, not all the waves will be as high as the last one. And this can be much like how a market moves. The market will move up and down, but it will still on average move higher in an uptrend. Much like how the ocean will go through periods of stormy weather and calm weather, making large waves and big waves, the market will also go through periods of large swings and small swings. It is really important to know what kind of weather you're in, because this can also dictate how you trade and what is expected or a normal move in the current trend in the market, and maybe what's a outside or abnormal move in the market. Now, the easiest way to spot an uptrend is use the pattern of it having higher highs and higher lows. Every one of these peaks is higher than the last, and every one of the lows is higher than the previous low, causing this general uptrend. Now, for downtrends, it'll have lower lows and lower highs. Every high is lower than the last, and every low is lower than the low, causing it to be in a downtrend. It is a very simple concept, but I think it is looked over very often in making sure you know what the trend is, because trading with the trend is very important. It's like trying to go against the tide in the ocean. It's a lot harder to trade against the trend than trade with the trend or move with the tide. The market doesn't always move in uptrends and downtrends. It'll also have periods of sideways trends. Now, these can be a lot harder to spot because they won't have easy higher highs and higher lows to spot. The highs and the lows will be all over the place. Sometimes they can be like this one right here, with all the highs being relatively the same and all the lows being relatively the same, but quite often it will be very choppy and chaotic. And that is why sideways trends can be a lot harder to trade than a basic uptrend or downtrend. But it is very important to know when you're in a sideways trend, so you're not betting that the market is going to go up by a large amount or betting that the market is going to go down by a large amount. People still make money in sideways trends, but you need to understand that the trend has changed from either an uptrend or a downtrend. It is now in a different trend, and when the trend changes, you often need to change your strategy to make money in that environment. Going back to our wave analogy, waves will always move around sea level. There will be times where the wave is above sea level and times where the wave is below sea level, but the waves will always move back to sea level at some point. Now, think of sea level like a moving average. The stock price will always snap back to that moving average, just like the waves will always snap back to sea level. With the moving average on this chart being that orange line, the price action or the stock price here will always come back to the moving average as it gets farther away. And you can use this to know when maybe you shouldn't buy the stock, or maybe know when you should buy the stock. In an uptrend, if the price gets really high above the moving average, you probably don't want to buy it, with the idea that it's going to have to come back to sea level. But if there's a pullback below that moving average in an uptrend, you probably want to buy that stock because it's more likely that the stock is going to move higher because it's in an uptrend and it wants to go back to that moving average. So you have two factors there that are in your favor, potentially pulling the stock higher. To show you a real example on a stock chart, here is Amazon on a daily time frame. Now, even though Amazon is in an extremely strong uptrend, it will always snap back to that moving average that I have in this blue line. And because it is in that such a strong uptrend, it might not go below the moving average, but it will always come back to the moving average. Now, this concept can save you a lot of trouble because, as you can see, as Amazon gets farther and farther away from the moving average in the upswings that it has, the likelihood that it goes higher and higher becomes less. It always has to pull back to that moving average. That moving average is like gravity. It always wants to come back to that moving average. And so, as you can see, when it gets really far away from that moving average, it'll snap back to it, and then it'll allow it to go back higher. And as you can see right now at the top right of the chart, Amazon is really far away from that moving average, and you can see that it has a really red candle already, and it might start making its move back to that moving average because it has got so far away. So how do you know when a trend is going to reverse? Well, this just goes back to the simple concept of, in a downtrend, it makes lower lows and lower highs. If you can draw a channel like I have here, that makes it even easier. Once you see that the market breaks out of that channel, that potentially means that the trend is changing. Now, once you see that the market either makes a higher high or a higher low, that is another confirmation that the market is changing trend. Now, you don't necessarily know what trend the market is going to change into. Maybe you want to wait a little while to see a stronger confirmation of where the trend is going to go. Just because it switches out of a downtrend, that doesn't mean it's going to go into an uptrend, or it doesn't mean it's going to go in a sideways trend. It's usually a good idea to wait and see where the market's going to go, and once it gives you a clear picture of what it's planning to do, for you to start formulating a trading strategy around that trend. Thanks for checking out this video. If you want to learn more about trading the stock market and how to read stock charts, make sure to hit that subscribe button. If you liked this video, give it a thumbs up. And as always, if you have any comments or questions, make sure to ask them in the comments below.